Yeah. Oh, okay. Hi, guys. Can you guys hear and see me clearly? Hi, Ralph. Hi, Greg. I will give the rest of the attendees a couple more minutes to come in before I start the session. So thank you for tuning in to today's session on Vantage. Hi, Dipesh. Hi, Isha. Some unfamiliar names. Right, we'll give the rest one more minute before I start today's session, yeah? Let me know where you guys are tuning in from. Right, so it's 5 p.m. here in Singapore. So in today's session, oh, hi Isha, from London. Okay, that's nice. So is it cold over there now? October. Right, so in today's session with Vantage, we are going to talk about using correlation to improve your trading. So any of you guys here actually use correlation, or you use other FX pairs or other asset class to reference before you take any trades? Hi, Greg. Greeting from Slovenia, Europe. Oh, nice. Let me know. Okay, so for if you guys can see my screen here, right? Let me know if I'm sharing the correct screen. So on my left side, I have another page where I can see all your comments and all your questions. So feel free to just fire away any questions or any requests that you have. I will be able to see them. Okay, maybe just a couple more seconds for all the attendees to come in. Hi, Jacob from UK. Okay, so let me just start today's session. So today we're going to talk about using correlation to improve your trading strategy. And let me know if you have used or you have heard any of these methods before, right? So what we mean by correlation to improve your strategy is like, for example, you use a certain currency pairs for reference, or any other asset class for reference before you actually take any specific trades. Right? Any one of you have heard of or used it before? Or is this totally new? Okay, Isha, USDKN, oil, okay. Yeah, so some of you guys have actually used or heard of this method before. It is a good and easy method to use if you know what currency pairs or if you know how to reference them. Okay, so without further ado, let's start today's session. I'm Annabelle and I will be hosting today's session with you. So for Greg and those people or traders who haven't heard of or used this method before, don't worry. I will make this session as easily understandable as possible. Okay, I'll try to break it down to make it easier for you guys. Okay, so before I start, I need to talk about the disclaimer. So the information which are expressed in the presentation are solely those of a presenter and not necessarily those of Vantage, and we are solely used for educational purposes only. So they do not constitute investment advice and or consultation on how a client should trade. So please, if you are going to take any trade, do your own due diligence. So in today's agenda, give me 1 second. Let me grab a pen. Where's my pen? Oops. Okay. Okay, so we're going to talk about what is correlation. I'm going to start real slow, right? And easy. So we are going to talk about the definition of correlation. What is it? Understanding positive and negative correlation. And there is strong versus weak correlation. Correlation across multiple time frames, because some of us, we actually trade on a daily time frame. We have the H4 traders, H1, 30 minutes, and then we have the scalpers, maybe 5 minutes, right? And then we'll use correlation to identify support, resistance, and breakouts. So these are the two main strategy that we're going to talk about before I move on to live charts. Okay. Okay, so introducing your analyst. So we have Desmond, our chief trader. We have Cassandra, Jean. My picture is not here because it isn't uploaded yet, but I'm an investment analyst here at Everest Fortune Group. We are a finalist for Best FX Research 2019, 2020, and 2021, as well as finalist for Best Equity Research 2020, 2021. All right, before I actually start the session, maybe let me grab you guys real quick. Okay, so if for those of you who actually missed this session or who want to view our previous session, you can go to our page vantagemarkets.com, and under the education, there is the educational webinars. So those who came in late or you have missed the session, don't worry. We have this. So this is the upcoming session where you can sign up for. And then for the past webinars, if you can't find it here, we do have a YouTube channel as well. So you can go to YouTube, right, under Vantage Plus. Give me 1 second. Okay, so under Vantage Plus, you will have all our playlists. If I'm not wrong, we are Tuesday masterclass, right? So this is live right now. So you can go in and see all our previous sessions that are recorded, as well as today's session will be recorded as well. So don't worry if you miss any parts of it, you can rewatch it on YouTube itself. Okay, so I'll just cut this and paste in the okay. So if you guys missed it, don't worry, you can rewatch it on the YouTube channel. And I also want to bring you guys to our special VIP portal. Let me see what it's here. Okay, anyways. So we have a special partnership with Vantage. So Everest Fortune Group has a special partnership with Vantage Markets where we have a VIP portal. Let me just cut and paste here. If you are already trading on Vantage Market, right? We have this VIP portal where you can come in and you can get trading ideas. You can ask us questions. Let me show you guys how it works. So we have this section here, depending on which tier or what tailored service you actually require. We have this section here. You can come in. You can chit chat with us. You can ask us questions. For example, like maybe, hey Desmond or hey Annabelle, what do you think of USD yen in the coming 4 hour in the coming days? And then we will respond on a one-on-one. Okay, we'll give you our advice, our analysis. Okay, trading ideas, if we do have any, we'll be posting here. Right, trading ideas. Okay, you can DM our chief trader as well, right? Then we have the news, it will be updated. We have gold, news, oil, the majors, yen, euro, USD. Then we have our pairs. So for the pairs wise, we have majors, your commodities, your crosses, your indices, as well as crypto. So if you have seen any pairs that you want, but it's not here, do let us know. How this page works is that we have a chart, we have a live chat. So for example, you come in and then sometimes we'll post our analysis here, so you can take a look. So today I actually posted one. Okay, the levels can be highlighted so you will not miss any of the parts. So for example, if I have this analysis and I do not have all these levels, you might be slightly confused. But what this VIP portal does is that we actually highlight very specifically where is our lines and what we are doing right on the charts. What methods, like for example, Fibonacci retracements or Fibonacci extensions, at which level, what price point, you will see exactly. Okay, so this is how it works. So if you have any questions, you can come in and say, hi, Anna. I'm looking at a breakout buy. Then you can highlight to me, okay, I'm looking at this breakout buy maybe here. I'm looking for a breakout buy. Is it worth a shot? And then we'll respond to you individually. Okay, so that's how our VIP portal works. Okay, so let me just jump back to our slides. Okay. Okay, so today we are going to talk about correlation. So for those who have used and heard of it, can you tell me what correlation means? Like in your own opinion, what does FX correlation mean to you? Like, does it mean they move in the same direction, like be it bearish or bullish? Does that mean a correlation? Okay, I'll give you guys some examples. So what correlation means is, for example, I say like COVID. So what is correlated to COVID? People will say maybe medication, right? Mask, right? So these are correlated because when COVID increases, COVID patient increases, all this will increase as well. So they are positively correlated. Okay. And then there is negatively correlated, meaning to say, if I have a lot of COVID cases, what goes in the opposite direction? I can think of tourism. I mean, you can't travel when there's COVID, right? So it goes in the opposite direction. When COVID cases go up, my tourism goes down, right? So there is positively correlated, negatively correlated, as well as there is neutral. So what is neutral? Maybe the amount of wine being taken, right? It doesn't relate. So if I have more COVID cases, doesn't mean people drink less wine. Or tissue paper, the sale of toilet paper or tissue paper. So these are neutral. There's no correlation at all, right? So when we talk about correlation, it usually means they are positively or negatively correlated in most cases. So what we'll do in this session is we'll figure out how our FX pairs, be it foreign currency or different asset like your indices or even your crypto, can affect how trading works. Then there is a different types of correlation. Do you guys know what are the different type of correlation? Anyone want to give it a shot? All right, so there is what? There is the FX pairs correlation, correct? And then there is the cross asset. So for example, you can find direct correlation between your maybe Euro USD and USD CHF, or that might be negatively correlated, but certain currency pairs work in similar steps, or they are very positive correlated, which I will share later on. So FX pairs, that's number one, the different types, right? And then you have your indices and your FX. So that is a different asset class, but they do have correlation. For example, maybe sometimes I look at my maybe DXY, or maybe your other indices. You can compare them to your FX pair as well. And then maybe you have your, or maybe SPX as well, depending on what you're looking at. Okay. I'm not saying they are directly positively or negatively correlated, but I'm just saying that I'm just naming out the different types of correlation that you can have, right? It's not just FX itself. Okay. And then you can have maybe your crypto and your FX, or your crypto and your indices. Or maybe the more popular one would be your precious metals, like gold and your FX, or perhaps your gold and your indices. Depends on what pairs you usually look at. Okay, so there are different types of correlation within different asset class. It doesn't mean that it's only within FX. It can be further than FX. It can be commodities. It can be a lot of things. It's just how we perceive our data, right? And how much we can gather, and how we can put them into different categories that we can maybe correlate them. Okay. I just joined late. Where short description about chat platform advantage. Do you mind telling me again? Okay, I'll repeat that later on. Maybe a couple more minutes, or at the end of the session. Okay. Okay, so for this, in this case, we are looking at GBP, USD, GBP, JPY. So you can see that this is positively or negatively correlated. Is this positive or negatively correlated? Okay, in this case, it is positively correlated because, yes, correct, because the orange part, which is my GJ, goes in sync exactly step by step, right, with my GBP USD. They move exactly in tandem every step of the way. Now, let me see whether I have an example. So sometimes the charts might be moving in a positive manner like this. So this has a very strong positive correlation. Let me highlight, there is -1, 0 to +1. This is the strength of the correlation, meaning to say 0 meaning neutral, +1 meaning very, very strong correlation. And then -1 means very strong, very strongly negative correlated. Okay, if that makes sense. So this is the strength of the correlation. It can be maybe 0.8, 0.5. Okay, so there are different strengths to there's a spectrum of it depending on how correlated they are. So in this instance, I would say that my GU and my GJ is strongly correlated, strongly positively correlated. So maybe this is a +1 or a 1. Okay, depending on how you name it. Okay, so this is, I would say, +1 correlated, because at every step of the way they move exactly the same. But I would like to highlight, if you guys actually use like the economic news calendar, sometimes there might be major news, like maybe the Fed increases rate, or Fed cutting rates, or your CPI data, or non-farm payrolls. It might affect one of the currency or the other, and there might be a spike, or there might be a negative correlation suddenly. Okay, but it's okay because usually that happens when there is a major news. Let me see whether I can show you an example. For example, let me try to find. Give me 1 second. Let me look my layout. For example, I probably can find it. Okay, for example, yeah. Okay, this. So this is my GBP and my, just nice, my GU and my GJ. Okay, so in this instance, you can see that, like I've mentioned, they actually move exactly in tandem as you can see here. But for example, sometimes there might be a spike up. In this case, you can see that my GJ actually spike up here, but my GU actually come down here. So in this instance, which is rarely the case that will happen, it means that there might be a major news. It might be a Japan interest rate intervention. It might be a USD intervention or whatever it is. There must be a news somewhere here. That's why there is a negative correlation, but usually it moves in tandem. Okay, so if you ever see something that is an outlier, you don't have to worry. Most likely it is a announcement or a big news. Okay. Okay, so let us come back here. So yes, this is positively correlated. And then here we have our AUD USD and USD CAD. So in this case, you can see that our prices move in the opposite direction. Okay, can be messy. Let me erase this. So when my prices go up here, you can see that my prices of my AUD USD actually come down here. So as it's going up, my USD CAD comes down, correct? So this is negatively correlated. I wouldn't say this is very strongly negatively correlated. Later, I'll show you some that are very, very negatively correlated, but this is quite negatively correlated, maybe a 0.8. Okay. So far, you guys have any questions for me? If you have any questions, feel free to type it in the comment section. I will reply as soon as I can or when I see it. Okay. Okay, now here is the Euro USD and our SPX. Like I've mentioned, there are different types of correlation between different asset classes. It's not always FX. Okay. So in this instance, you can see that when my price come down here, okay, this one is slightly correlated because you can see that they are moving in, sort of in tandem, but it's not the best, right? My prices are still moving quite similarly. Excuse me, sorry. But it's just that in this case here, you can see that my prices are, oh, thanks, Wayne. My prices are inverted. So when prices go up here, it came down here. Okay, this part that is sort of moving in the opposite direction, but in other cases, it's still moving in tandem in a sense that when it moves up, my orange also moves up. So I would say this is maybe a 0.6. 0.6, not so strong correlated, but they are sort of correlated. Right. So I hope that you guys actually know how to differentiate a positive and a negatively correlated. This is not difficult to understand. So positive means they move exactly the same way. Negative means they move in the opposite direction. So positive is parallel. Okay. Sorry. Negative means opposite. I usually think of it as a crocodile. Crocodile mouth. Okay. And then it depends on how strongly they are correlated or negatively correlated. Then you can gauge how strongly they are correlated in that sense. here we have our gold. Gold is usually one of the give me 1 second. Gold is usually one of the commodity pairs or precious metal that we use to go against our USD, right? So in this case, we are using our SPX. You can see that they are negatively correlated, right? Because one is going up and one is going down. But the correlation is not that strong because they are not moving in tandem, meaning to say they are not moving exactly in the same way. But overall, you can see that they are going in the opposite direction. Okay. Do gold and Dow Jones have a positive correlation? We can take a look at that later on. And I'll teach you, I'll give you a tip, a very, very important tip later where you can find exactly what is correlated and what is not correlated. Because, I mean, there are so many FX pairs, there are so many different asset class that you can compare. I don't think anyone can remember exactly which pair correlates to what, but obviously those certain pairs that you trade often, you will remember, right? But later I'll show you a tip or a secret. So using correlation to identify support and resistance. So identifying support and resistance is part of most traders will be able to identify a support and resistance, right? So how do we actually use a correlation to identify? So for example, we are taking a look at our AUD USD and my GBP USD. Now, can you see a similarity between both of the charts? Right, they move sort of quite similarly, but not identical. So I wouldn't say they are very, very strongly correlated, but the overall chart movement is similar. So you can see that my price back up here, came down here, resistance 1, resistance 1, resistance 2, 2, 3, 3, right? And then there's 4. So maybe we could actually predict that there might be a 4 here. So this is how we actually use correlation, okay, to identify our support and resistance in a sense that they don't move exactly the same, but you know that they will be moving into a zone that is a support or resistance. So support 1, 2, 3. Support 1, 2. You might think that this will be okay. This one is not that close, but it can be counted as one support as well. But yes, so this is how we actually identify our support and resistance based on correlation. So for example, if we are sending our analysis to a company or a bank or a fund house, we'll tell them that, hey, you know, AUD USD and GBP USD, our resistance level is at this level for this level, this level for this level, and our support at this level for this level. Okay. So there are many other pairs. Okay, maybe I just show you guys. Okay, so what I usually do, this is oh shit. This is the cheat sheet that we usually use. You can go to correlation. You type my FX book correlation, can go in this page here. This is the whole page of cheat sheet where you can actually take a look at which currency pairs you trade often. And then coming here, you can use the time frame, and remember, for different time frames, they work differently. So whatever that I'm seeing on a 1-day chart might be different on a scalper's 5-minute chart. So my suggestion is you choose which time frame you use on your trading platform. So if you are using a 1 hour, just click 1 hour time frame. Find currency with correlation higher than, for example, 90%. Then they will highlight to you. And then you can see here that these are very, very correlated. Obviously, AUD is the same. So ignore the 100% because it's usually the same. So I would say that 95 to 99 would be the best. AUD JPY, AUD USD. Okay. Let's take a look here. Let's see whether it's exactly the same. AUD JPY plus. Now this is, wait. Okay. I will change this to maybe candles. Right. Okay, now this is what I mean by 100% or very, very, very strongly correlated, because if I move my chart, let me see if I can move it up. Okay, hang on. Let me try again. We will. Okay, does this work? Okay, this is good enough. Okay, if I move exactly close by, right, you can see that they are so identical in movement, right? So this is a very, very strongly correlated. I would say this is like a maybe 90 to a 95 percentile strongly correlated FX currency pair. Okay, so this is what I mean by very, very correlated. So this is a cheat sheet that we use, right? You can come here and then you can take a look at which currency pair actually move in tandem. And it's a very important chart because sometimes some currency pair will react faster than the other. And you can see, you can utilize the correlated currency pair or negatively correlated pair as a reference to your next move. Okay, I'm not saying that using correlation is 100% guarantee that you will make profit or whatever, but if you use it as a reference together with your other techniques, like maybe with your Ichimoku, maybe with your Bollinger Band, maybe with your breakout strategy, maybe with your Fibonacci levels, it will give you the extra boost or extra confidence that this is a good trade to take, right? Maybe this will contribute a 15%, your Fibonacci contribute a 15%, your breakout contribute a 10%. So all these small little steps will add up to your strategy to give it a more confident or more profitable trading position, right? Let me go back to my charts. So yes, this is how we actually identify which currency pair is correlated to which other currency pair. Okay, let me catch my breath. So any questions that you guys have? Okay, so far so good. I hope it's understandable because for correlation is nothing much. It's mainly about how you look at the charts, how you identify which is positively or negatively correlated, and then also based on which currency pair you like to trade, and then you go find one that is directly correlated, or it could be negatively correlated as well, depending on whether you prefer which method. Okay, so now we are going to use correlation to identify breakouts. So what we mean by this is, I will use this chart as an example first. So for example, okay, so in this case, maybe my AUD USD react faster in or maybe my GBP USD react faster in my London session, right? So in this case, maybe this price has already came here, a breakout. Okay, a bullish breakout here. But my price for my AUD USD is still here, or hovering around this area. What you can do is you can reference these two currency pair, and you know that, hey, if they are positively correlated, maybe there'll be a chance that this will actually move up as well. So this gives you the extra knowledge prior to a movement that, hey, I'm actually gonna look for a break here as well. Okay. So what we do here is we are looking at our gold and our US dollar. Okay. In this instance, you can see that they are negatively correlated because one is coming down, one is going up, right? So this is negatively correlated. And then we can see that touch once, twice, and we're looking for the breakout here. Here we have, okay, this is quite different because you can see that you see it's not exactly the same, right? Because this is not so strongly negatively correlated, but you can see that wherever I draw here is not in sync to this. So the reaction time is already different. But what we are trying to say is that, you know, here at the breakout level, this obviously reacted faster already as compared to this. So we are expecting that if price were to go, okay, for example, let me paraphrase this. Just ignore this area here. Ignore this whole part. Ignore this section here. So for example, if we didn't have this and you're only looking at this breakout, right? And I'm looking at my US dollar. Okay, I'm looking at, hey, you know, my XAU has broken. Maybe my US dollar is going to fly down, right? We might have this thinking because they are correlated. But you do not, you don't want to be trapped here because this might also be a fake out, right? It might be a fake breakout, right? You do not want to fall into the trap of this. So we wait. We will wait for a confirmation here, right? On the second, third, fourth candle. And we see that, hey, you know, my prices are slowly coming down, and we wait. So at this point in time, when it comes here, I have full confidence that once it breaks out, it will fly to a certain level. Okay, so that is what we mean. So we use this, when we know it's correlated, we can use the other pair as a reference because this price obviously move faster. But one thing to take note as well is, for example, if that day there is a very important news, you should be slightly more careful because some news might cause a sudden price movement, but it might not move the other way, or it might be moving the other currency pair at a slower pace, at a slower time. So have to be extra careful when there is a major news that is coming up. Okay. Okay, let us move to, I have come to the end of the presentation. We can move on to the live charts. But before that, I will maybe highlight again the educational page because someone has requested for it. Okay, give me 1 second, yeah. Okay. So for Trong, right? Just now you mentioned you want to take a look at the VIP portal. If you already actually have a Vantage platform and you have some money and you're trading in it, you can sign up here. Let me just cut and paste. If you can see, right? You can just go in and sign up for it. So what we have here, I'll just briefly run through again for some of you. We have the chat section where you can come here and you can ask any of our traders, analysts, or even Desmond himself what he thinks about a certain currency pair. For example, if you're going to sell Euro USD because it has been on a decline and you are curious how far it will go, you can actually type here, hey, Annabelle or Desmond, do you think that Euro will go any further on the downside? Okay, so this is a chit chat section where we have on a one-on-one tailored service. Okay, trading ideas, sometimes we do have this section where we post our ideas. Okay, news-wise, we do post if there are any important news. All the majors are here: USD news, Euro news, GBP news. So our analysts will actually update this, okay, quite often. Our major pairs, the XY, Euro USD, all the USD pairs, yen, commodities, like your gold, your Brent crude oil, your crosses, all the crosses here, indices, S&P, Dow Jones, as well as crypto. So this page works in a sense that, for example, this is Euro USD. Our analysts will actually come in here to highlight some levels or actually put out our analysis for the day. So we will highlight the sections and what our strategy is, right? So you will know exactly what we are talking about instead of having one whole chunk here and you do not know what strategy or which level, what prices you are looking at. So this is very clear cut. If you have any questions, you can come here and type, hi, I'm looking at whichever level. You can highlight here. Okay, you highlight and then you let us know I'm looking at which level. Do you think there will be a breakout, for example? So and then you can highlight the level and we know exactly what you're talking about. So this is how the VIP portal works. It's very interactive. So do check it out. Okay. Okay, now I'll move on to my live chart. So let's take a look at how we can use correlation to trade, right? So for example, okay, this is too correlated. I don't think I can use this. How about this? Let me see. Maybe I can use this as an example. Let me try. Okay. So we're looking at how about, so this is USD CHF and let me delete 1 second. Okay, USD CHF and let me add Euro USD. New prices, same percentage scale. Not that great. Okay, maybe we'll just pick one from here. I don't think I can pick something. I want to show you guys how it works. I'll pick something that's probably, okay, let us try 80. Okay. Any request, let me know. Okay. So now I will just pick we pick Euro, okay? Maybe we can try Euro USD and GJ. Euro USD and GJ. Let's try. Okay, it's okay. Okay, I can work with this. So for example, let me change the candles. Okay. So in this case, we have our Euro USD as well as our GBP USD here. You can see that they are moving in tandem, but not exactly the same, right? It's not every step of the way they move exactly the same. So this is about a 0.8% correlated. But what I wanted to do is, maybe I should shift it. New pane. This will be easier. So I can draw and you can see. So for example, zoom into the 1 hour. Okay, so in this case, you can see that our price right here is moving quite in tandem in a sense, because now I have zoomed into the 1 hour, all right? So in this case, my prices are moving exactly the same. What I can see here is, for example, I'll just give you guys a setup, but it's just an example to let you guys understand how price or how correlation can be used on a live chart. Okay, so for example, maybe I'm looking at maybe potential. Okay, prices seem like it's going down, right? So we are looking at a potential breakout maybe at this level here. Okay, so if my price actually come down here first, oops. Okay, if prices actually come down here first. you can use it. Let me draw on the same chart at the same time. See, if I draw it at the same, that's why correlated pairs or positively correlated pairs doesn't mean that it will be very, very directly at each point in time be correlated, because you can see that I have no, at this point here, you can see that, you know, price bounced off here. It could be a potential support level. If I pull back further, you can see that this is clearly an overlap support, right? Because price came here, bounced off, came here, breakout, but it came back to test again. Okay, so this could be a potential key level, key support level. But if I actually drag back the same to the same time or same level, it might not work the same way as a key support. So don't be too rigid on the fact that, you know, if it's correlated, you have to draw exactly the same. What we are trying to say that is that you can use it as a reference. Okay, so if price were to break out here, let me draw it. Price came down here and then it break out maybe at one candle. Okay, my drawing is horrible. Okay, it break out here, one candle. Okay, and then here it's slow to react and it's ranging and stuff. You don't have to worry, because if there is a breakout, sometimes it takes time. So maybe it break out one candle and then came back up, but then it strongly flew down again, for example. But your price here is still ranging. Okay, you don't have to worry, because it's already showing signals that, you know, my price is coming downward. So in this instance, if there is a lag or if there's a difference between how they move, but it's moving in a moving in the same direction because they are correlated, you have a confirmation that, you know, price is going to come down here, or even price is going to have a breakout. So in this instance, we are not looking at this level here because there's clearly no line to break out, but we will be looking at maybe this level, or maybe this level here, right? So it's depending on how you look at the chart, okay? If there is a breakout here, but prices here are still ranging, don't worry, because maybe my pair, this currency pair is a bit slower to react. So if there is confirmation that your Euro USD is actually going on the downside, you can also correlate that this price might be going down. Although you might not know how far it will go down, but you do not just use the correlation. You can maybe use your FIB levels. You can maybe use your stochastic or other indicators, Ichimoku, RSI. Okay, so for example, maybe at 61.5, you know that it might break at this level. Okay, it's just an example that I'm showing. So maybe your correlation will give you a 15%. Maybe your retracement level will tell you that, hey, you know, this level, if it breaks this level, it will go down further. So maybe your retracement level give you another 15%. Okay, and maybe your other indicators like your stochastic or your Ichimoku. Okay, so clearly here the Ichimoku is red and trading below the cloud, so it shows that it's negative. Maybe in this case here, the Ichimoku actually also shows that, you know, it's red and it's trading below. Your Ichimoku gives you another 10%. So all these small strategy or small trading techniques that you actually input will help you give you more confidence and more give you the extra boost to tell you that, hey, you know, this trade, you know, we are actually very sure and very certain that it will be going in a certain direction. So this is how we use different techniques, different methods to put them together so that you can have a more confident and more defined trade entry. Okay. Okay, Isha, I've noticed at times USD, CAD, and OI as an example for this topic aren't always correlated. They move the same direction up or down occasionally, but meant to go opposite direction to each other when markets are in good condition in general. Is this based on fundamental news catalysts that make this direction change occur? Okay, yes, I would agree that to a certain extent because like I've mentioned, you can use this chart to take a look later. But like I mentioned before, right, if it's correlated, there are different degrees to it as well. It can be a 0.5 correlation. There can be a 1 correlation. And then sometimes, even if it's a fully correlated or very strongly correlated, sometimes there might be a difference in movement in the sense that, let me try to draw here. In a sense that maybe if my price is going this way now, suddenly my other pair might just have a hike. Okay, the reason being there might be some important news that are coming up, or usually most of the time it's important news coming up. They will react or they might react after. So I would say that if there's a sudden move in direction, it means that there will be important news or important news has already been announced. That's why the significant difference in a strongly correlated chart, right? There can be other factors as well, but I would think this is the main one. Okay. Okay, you're welcome. Hey, I've come to the end of today's session. I hope you guys have learned as much as I did. It's quite a simple and relatively easy topic to understand. You just need to find whichever pairs that you actually trade most, which are the correlated ones, and then you can find out patterns between the both of them. So for Aisha, she actually noticed that prices sometimes react differently or react only in good market conditions. These are very important small details that people do not realize. So you will only realize it if you trade that specific pair or asset class. So you can zoom into whichever asset class that you are actually looking at or currency pair, and you can try to monitor it over a series, time frame, like maybe a couple of months, and try to understand those the correlation between them. Is a very important technique or useful technique. Okay, so I'll leave this. I'll cut and paste again. So this is a very good page to actually explore. Okay, thank you guys for tuning in today. I will see you guys in the next session.